going to be doing a breakdown of the trade we took on Volatility 100 1x indices. Alright, so without further ado, let us dive in. Okay, looking at the chart from if we look at it from the daily time frame, okay, so we see that the price has been going down, has been downtrend. Okay, so coming down to 4 hours, we saw that there's been a break of structure here to the downside. This low was taken out, okay, and then price went up and then it broke this low, so it's been on a downtrend. So now 4 hours, this is the trade we actually took. Okay, so this is where we took the trade. So I just want to show us how we did that. We are just following the same pattern. Okay, all right, so let's take this out. So that I'll have a clear chart. Let's take this out. Okay, so now this is where we took the trade. So since the price has been on a downtrend, so these are 4 hours, so we saw that here that there was a break of structure to the downside, so price broke structure. So there was a break of structure here, BOS, break of structure, okay, so price broke structure, it took out this previous low and formed a new low, and then now this is the zone that caused the break of structure. This is that zone that caused the break of structure. Okay, so I'll mark out this zone that caused the break of structure. So this is the zone that caused the break of structure. So this zone caused this momentum that broke this previous low. So there was a break of structure to the downside, and then of course there is a liquidity void here. Okay, between this candle and this candle is a bigger void there, meaning that price that's called market inefficiency, meaning that price in the future is going to come in and trade efficiently to this zone. Okay, all right, so we first of all saw a break of structure. This is the zone that caused the break of structure, so we zoom down to lower time frame for refinement. So go to our 2 hours time frame. So coming down to a 2 hours time frame, what do we see? We can further refine this to this. Yeah, we can refine this zone to this. So if we go to our 1 hour time frame, let's see what we got in our 1 hour time frame. So in our 1 hour time frame, here we are. Okay, so this is what we got in our 1 hour time frame. There's not much refinement to make here. Okay, so we saw this. This is what we saw. All right, so so now this was our zone. So price came in and tapped into our zone. So price broke structure, came in, it tapped into our zone. So when price tapped into our zone, what did we do? So we zoomed down to a lower time frame, okay, to see if we can get our entry. Remember our entry model? Okay, our entry model is a change of character, break of structure in lower time frame. So this is expecting to see something like this. Let's see a break of structure and then this. So this is what we always look at for 4 hour entry model. All right, so we're looking at for something like this, break of structure. That's a break of structure. That's the lower time frame. That's this entry model. So break of structure, price tap into that zone that caused the break of structure, and then it sells. So it's the same thing we saw in the 4 hour time, in the higher time frame. It's the same thing we're also looking at for 4 entries in the lower time frame. So this is the model we are looking at for. All right, so now price came in, tap into our zone. So we didn't see something like this. Okay, so we now went down to 15-minute time frame. So coming down to this time frame, we saw what price did here. So there was just it was kind of consolidating. So we see there's a seemingly equal lows here. Okay, and then we saw what happened here. This is what we saw here. So all this be acting as liquidity, meaning price is going to take out this in the future. right? So it's acting as liquidity and internal liquidity, and then this is also another liquidity here, meaning after all this consolidation we're expecting that price is going to break out this equal lows. Okay, then also this is also another liquidity that's lying up here. So now when we came into our when price tapped into our zone in the 1 hour time frame, okay, we saw there was no break of structure. We didn't see this kind of pattern that would have made us to enter the trade. So we came down to our 30 minutes time frame. And we saw all this, okay, in our 30 minutes, and we saw all this. Now looking up, you see that there is also another zone up here, okay. Now notice what happened. There's another zone up here in the 30 minutes time frame. We have a supply zone up here, and this is an order block. Now this order block caused this break of structure somewhere up here. This is break of structure, okay, and this is the other block that caused that break of structure. So that means why price was doing all this is because there's a zone, a more extreme zone that it's looking at tapping before it goes down. Okay, so that's why when price did this, we did not see any proper break of structure, rather we just seeing this consolidation around this zone. Whenever you see this kind of thing, stay away from the market, just watch it, let it play out. So we saw this price was just bouncing and bouncing and bouncing. So this is liquidity equal lows that is to be taken out later on, and then of course this is another liquidity line here. So that's we can take out this now, we can take this out now. So we see price came in, swept these highs, and then came in and tapped into this small extreme zone in the 30 minutes. So price tapped into this zone. Okay, now so the moment price tapped into this zone, the next thing we did, we waited for our pattern, our entry criteria, a break of structure, change of character to the lower time frame. So coming down to our, let's go to our 10 minutes time frame. So coming down to our 10 minutes time frame, what did we see? So we saw here a break of structure. Now yeah, this is where we saw a break of structure. We saw a break of structure to the downside. So price came in, tapped into our zone. Okay, price came in, tapped into our zone. After price tapped into our zone, we saw a break of structure. This is the break of structure. Okay, this structure, this low was taken out, break of structure. Now this is the zone that's caused the break of structure. This is that other block that caused the break of structure. So this now becomes our area of interest, not necessarily a point of interest, but area of interest. Like I always tell us that whenever I see a situation like this, you consider all these as our zone of interest, okay, as our area of interest. So this is where we saw the break of structure, and then of course there was a, after this break of structure, we saw there was a okay, after this break of structure to the downside. Now looking at this in the 10 minutes, there is no liquidity for it there, but if we go to our, sorry, not liquidity void, there was no change of there was no imbalance, there was no imbalance there. Okay, so there was no imbalance in the 10 minutes time frame, but coming down to the 5 minute time frame, we saw that there's an imbalance here. Okay, there's an imbalance here. So price came in, broke this low, and this is the place that, this is the zone that caused the break of structure. Okay, so this is the zone that caused the break of structure. All right, and now if you look up here, there's also another zone here. Okay, there's also another zone up here, which there's a break of structure here as well, which is another zone, more extreme here. But The reason why we are so confident to take the trade here is because we already saw that it has taken out liquidity. It has done what it wanted to do, and then it has tapped into a more extreme zone. Okay, some people would have just taken an aggressive entry from here direct, because we have seen all what price was about to do. It has formed this as equal lows, and then it has taken out this liquidity. So just putting a buy a sell limit from here would have just gotten the trade directly. But since we waited for a confirmation entry, and then we saw this break of structure, now price didn't come into tap into this zone like we said, but it respected this order zone. So what did we do? So price came in, broke structure. After the break of structure, this is that area that caused the break of structure, that zone that caused the break of structure. So we waited for price to come in and tap into that zone, and then we sell. So this is how we took our entry. So seeing this here, after this break of structure, so this is where we got our entry from, and then we put our stop loss above there. Okay, at times, to be on the safer side, you can also put your stop loss above here, so that if it fails this, it can respect this zone and then see a sell-off. Okay, but this is actually where we put our own stop loss. Okay, so price tapped into that zone, and it's where it went down. Like I said, in the 30 minutes time frame, one would have used a sell limit order. Okay, that's a pending order, and then you would have still gotten that trade. Why? Because we have seen all we needed to see. So because we saw a more extreme zone here, so price came in, it formed all this. Okay, formed seemingly equal lows, and then of course there was liquidity here. So price came in, took out that liquidity and tapped into our zone. So we would have just gotten an entry, an aggressive entry, okay, without waiting for any confirmation. But of course, we always wait for confirmation. So that's exactly what we did here. So we waited for confirmation. So price came in and then formed that. Okay, so break of structure, price went and tapped into that same zone, and this was our exit point. Okay, the previous swing low. So this was our exit point. So price came in, and then of course it's tapped into our TP. So that's how we took the trade. Okay, all right, so that's that for that, guys. So till we see you in our next video, bye for now.